Hello, I'm Eileen Zhou, a Senior Manager at the International Public Sector Accounting Standards Board, the IPSASB. With me today is João Carlos Fonseca, a Principal at the IPSASB. Welcome to this webcast, Leases, an Introduction to IPSAS 43 Leases. This webcast will provide an introduction to the key features of IPSAS 43. You may also find helpful the at-a-glance summary of IPSAS 43, which is available on the IPSASB's website, www.ipsasb.org. Our webcast today will cover 7 aspects related to IPSAS 43. A brief history of the Leases project, the main features of IPSAS 43, the scope of IPSAS 43, definition of a lease, lessee accounting, lessor accounting, and sale and leaseback transactions. We'll cover the next steps for this project at the end of the webcast. IPSAS 43 was issued after the review of responses to Exposure Draft 64 Leases. João, can you explain why IPSAS 43 was issued?
Thanks, Eileen. In January 2018, the IPSASB issued ED 64 proposing a single right-of-use model for lease accounting in the public sector. This would mean that lessors would apply a consistent lease accounting model with a model for lessees. When reviewing the responses to ED 64, the IPSASB noted that the majority of respondents agreed with the right-of-use model for lessee accounting. However, respondents were almost equally divided over whether a departure from IFRS 16 lessor accounting was justified, with a small majority supporting departure. On the other hand, respondents that did not agree with ED 64 proposals for lessor accounting did not have a unified view on the approach that should be adopted for lessor accounting and proposed a number of alternatives. The lack of consensus among respondents on the economics of and accounting for leases by lessors highlighted significant differences across jurisdictions. Additionally, respondents were of the view that IPSASB needed to address public sector specific issues related to leases, for example, concessionary leases, access rights, and other types of arrangements in the public sector, etc. However, respondents provided diverse views on how to address these public sector specific issues. After careful consideration of the ED 64 feedback, the IPSASB identified 3 options to progress the project. Retain IPSAS 13, develop a standard aligned with IFRS 16, or continue with a standard based on ED 64. The IPSASB decided that the public interest would be best served by proceeding with an IFRS 16 aligned standard, because it would address the key problem of off-balance sheet leasing opportunities permitted by IPSAS 13 and be less costly to adopt. Feedback to ED 64 made it clear that resolving the problems identified in the proposed lessor accounting model was unlikely to be achievable within a reasonable time frame, and guidance on public sector specific issues such as concessionary leases would be better developed once the revised leasing model was agreed. In January 2021, the IPSASB issued ED 75, which included IFRS 16 aligned lease accounting models for the public sector for both lessees and lessors. The overall constituents' positive feedback to ED 75 proposals and following IPSASB's Consultative Advisory Group advice led IPSASB to proceed with its ED 75 proposals and approve IPSAS 43 leases in December 2021. IPSAS 43 was issued in January 2022. Let's look now at the main features of IPSAS 43. Regarding lessee accounting, IPSAS 43 introduces the right-of-use model aligned with IFRS 16. Regarding lessor accounting, as it is explained earlier, the IPSASB decided to substantially carry forward the risks and rewards model that exists in IPSAS 13. IPSAS 43 introduces specific changes to the model for consistency with the lessee accounting model in the areas of lease modifications and subleases. As explained later in more detail, IPSAS 43 also enhanced disclosures to better evaluate the amount, timing, and uncertainty of cash flows arising from a lessor's leasing activities.
Thank you, João. Let's look now at some of the key parts of IPSAS 43. Can you explain the scope of IPSAS 43?
Thanks, Eileen. IPSAS 43 scopes out leases to explore for or use minerals, oil, natural gas, and similar non-regenerative resources, leases of biological assets, service concession arrangements, and rights held by a lessee under licensing agreements such as motion picture films, video recordings, plays, manuscripts, patents, and copyrights. These are within the scope of other IPSAS. However, rights held by a lessee under licensing agreements identified earlier can be within the scope of IPSAS 43 if a lessee elects to apply it.
Thank you, João. Can you take us through the definition of a lease and related definitions for contract and lease term?
Thanks, Eileen. A lease is defined as follows. A lease is a contract or part of a contract that conveys the right to use an asset, the underlying asset, for a period of time in exchange for consideration. The definition relies on the other two definitions that Eileen referred to. A contract is defined as follows. A contract is an agreement between two or more parties that creates enforceable rights and obligations. The right to use an asset encompasses the right to obtain economic benefits from use and the right to direct the use. The second definition is on the lease term. A lease term is the non-cancelable period for which a lessee has a right to use an underlying asset, together with both periods covered by an option to extend the lease if the lessee is reasonably certain to exercise that option, and periods covered by an option to terminate the lease if the lessee is reasonably certain not to exercise that option. Finally, a lease must have exchange of consideration. Let's have a look in more detail at lessee accounting requirements introduced by IPSAS 43. At the commencement of the lease, the lessee recognizes a right of use asset and a lease liability. The right of use asset is initially measured at the initial value of the lease liability. Subsequently, the right of use asset is measured at cost or at fair value. The lease liability is initially measured at the present value of the future lease payments by using the interest rate implicit in the lease, if that rate can be readily determined. If that rate cannot be readily determined, the lessee shall use the lessee's incremental borrowing rate. Subsequently, the lease liability is measured at amortized cost. IPSAS 43 also introduces recognition exemptions for short-term leases and leases of low-value assets, for which expense is recognized on a straight-line basis over the lease term or another systematic basis. Let's take a look in more detail what are the main accounting requirements in lessor accounting. As it is explained earlier, the IPSASB decided to substantially carry forward the risks and rewards model that exists in IPSAS 13. However, IPSAS 43 introduces some changes compared to IPSAS 13. For example, in lease modifications, IPSAS 43 accounts for a modification to a finance lease as a separate lease if the modification increases the scope of the lease by adding the right for the lessee to use one or more underlying assets, and the consideration received for the lease increases by an amount commensurate with the standalone price for the increase in scope. IPSAS 43 accounts for a modification to an operating lease as a new lease from the effective date of the modification, considering any prepaid or accrued lease payments related to the original lease as part of the lease payments for the new lease. IPSAS 13 does not include specific requirements relating to lease modifications. IPSAS 43 classifies subleases by intermediate lessors by reference to the right of use assets arising from the head lease and not by reference to the underlying asset itself, which differs from the current requirements in IPSAS 13. And finally, IPSAS 43 enhanced disclosures to better evaluate the amount, timing, and uncertainty of cash flows arising from a lessor's leasing activities, such as table of income, information about residual asset risk, information about assets subject to operating leases, maturity analysis, and changes in the net investment in finance leases.
Thank you, João. IPSAS 43 also includes new requirements to account for sale and leaseback transactions compared to IPSAS 13. Can you explain the new requirements, João?
Thanks, Eileen. IPSAS 43 distinguishes the accounting for sale and leaseback transactions by asking whether the transfer of the asset is a sale or not. If the transfer of the asset is a sale, then the seller lessee recognizes a right-of-use asset measured at a proportion of the previous carrying amount of the asset that relates to the right-of-use and recognizes a lease liability measured according to the requirements in IPSAS 43. On the other hand, the buyer lessor recognizes the underlying asset and measures it according to the applicable IPSAS and recognizes the lease according to IPSAS 43. If the transfer of the asset is not a sale, then the seller lessee recognizes a financial liability and the buyer lessor recognizes a financial asset, both measured according to IPSAS 41.
Thank you, João. IPSAS 43 completes Phase 1 of the IPSASB's Leases project by issuing an IFRS 16 aligned standard in January 2022. The Phase 2 of IPSASB's Leases project will now continue by considering public sector specific issues such as concessionary leases and other arrangements similar to leases. As part of Phase 2, the IPSASB has issued the Request for Information, RFI, concessionary leases and other arrangements similar to leases, and has already received comment letters from its constituents. The next steps of the RFI will be determined once the IPSASB continues its review of responses to the RFI. Thank you for viewing this webcast. For further information, please visit our webpage at www.ipsasb.org. From myself and João, thank you and goodbye.